Ladies and gentlemen, welcome back to Fintech Decoded with Monica and Musheer. We're delighted to have you back. Thank you so much for all the feedback that we got on our first decoding, talking about UPI and payments in India. We're still sticking to the payments theme, which was about use of DLT. And when it comes to use of DLT by CBDC, by central banks, we have CBDCs, right? Central Bank Digital Currencies. For those who are not aware, this is a technology that uses blockchain for generating and operating monetary policy and supply of sovereign countries and systems, right? Monica ji, your thoughts? How do you like CBDCs?
I thank you so much, Musheer, and thank you to for the question. Personally speaking, I've always been asked the question, what are CBDCs going to do, which other digital payment systems or current retail payment systems are not able to do? And the answers are still hard to find. I think we all of us are looking for these answers.
Yeah.
But at this point in time, there is a lot more that we have to unpack, specifically because there is a little bit of assumption and a lot more, I would say, positive intent added to all the statements that we are currently making and we are hearing from central governments all across the world and central banks who are leading these efforts. So personally speaking, I'm very excited about what the future is. I personally feel that there is a way for CBDCs to coexist with digital payment systems, but I feel that there is a lot more that will happen in the next perhaps the next few quarters before we can say that the long-term possibility is actually not a possibility anymore, and it's reality.
Which is true, and it also might taking a step back almost and going back to origins, right? And we're talking about maybe mid 2015, 17, that years where there were conversations around how DLT could be used by different central banks, one or two pilots here and there, maybe a dozen countries looking at it, right, in research perspective. My opinion is when we saw Facebook come up with a project which was called Libra, right, and changed names or whatever you want to call it, Facebook Coin to Libra, where for the uninitiated, it was meant to be a stable coin of some senses, basically a currency that is pegged to multiple international currencies, which included, of course, the US dollar, euro, etc. And the initial investments into the venture was led by a host of different major organizations globally, including some of the big payment players, but essentially run by Facebook. Now, for me, it is even at that time, it was 1.5, 2 billion user base for Facebook. Right now, it's a private company having access and dealing with at that stage, essentially the largest population under one central control in some senses, right? And once you have somebody that powerful with technology as their core at their core, there could be a lot of disruption to central banks and monetary policies, right? So central banks are primarily focused on setting monetary policy, ensuring that the economy is enabled through appropriate interest rates, the risks are contained of high inflation, and
Hmm.
you are enabling industry to progress while there is scope enough for the governments to borrow at a good pace or a good price, right? Rate essentially, right? So key element there being that money is and money supply is controlled by central banks. Once that goes away and is being managed by a private enterprise, there could be repercussions that are very global in nature and cross-border inflation, etc. Like some people say, if your country's dollar is pegged to the US, you're then essentially exporting the inflation whenever the inflation goes up in the US and vice versa, right? So you're importing or you're importing rather, sorry, the monetary policy locally. So Libra, I think, was a big catalyst in central banks sitting up and taking notice and not just dismissing it or saying, hey, we can take a look at it later. This is just a toy or a small group of people playing with some digital money in Bitcoin and blockchain. Nice technology, still not mature, can't do scale, which agreed even that Even now, some would question the scale, but you had that foundation for central banks sitting up and taking notice and saying, yeah, we got to do something if we want to be able to counter it. Now, fact remains that Libra really did not take off because they faced a lot of hurdles, pushback, regulatory hurdles in particular, which kind of skittled the whole project. And now there's some remnants that have come out of it and still a very small project as such. Right? They're parallels to the WorldCoin project, which we won't go into, but you did have that push, and then you had COVID as a catalyst, right?
I actually,
Go on,
sorry.
please. Yeah, no, go on.
I was going to say that as far as Libra is concerned, I think there is also a question of intent. Most of the countries and the intention of Libra at that particular point in time
Yeah.
seem to be laced with the fear of big tech taking over, specifically use cases that at that point needed and are still ripe for disruption. I do feel that had this been taken up by a non-private player, it would have
Mhm.
met with a lot more acceptance. Now, what we are seeing currently in the landscape with BIS running multiple projects in this area. We're also seeing central governments step in to try and make sure that these projects actually see the light of the day with backing by the central governments in most cases to promote the use of CBDCs in cross-border payment use cases. But I would say that the central banks have woken up to what would happen if a big tech player or a private player created and therefore had dominance in this particular side of the world. The second thing is that as far as use cases are concerned, Africa and there are other parts of the world which have payment systems. They're not as advanced, and the availability of a alternate like Libra would have helped these economies and of course the people and businesses there. But the question was the pushback was so strong, and of course then there was the natural fate of Libra, as it were, has been met. But it really spurred both the innovation as well as the urgency, with most countries stepping in on the CBDC efforts. And of course, China takes a pole position as always in most of these. That so far, we've got so many countries now who are already running pilots, and many countries where CBDC is already live.
Yeah, it's interesting that a lot of this innovation drive has come from Asia, right?
Hmm.
There have also been some elements of development from the Caribbean, in particular, where they also had live projects that launched about a year ago or so in the Caribbean. But essentially, the global South, as it's called, not my favorite terminology, but it's where you see some cases leapfrogging, some cases the
Hmm.
need to be able to keep up to pace with other economies. So you do more uh, work on the cutting edge side of things so that you can be ahead when these POCs become live projects as such. And you also have in some cases the ability to be more agile. The IT person in me is coming out in some senses. So because being agile, using the waterfall model or whatever you want to do, helps you be prepared for eventualities much faster than in other systems or other established G20 economies or part of the G7 more so, where it takes much longer to bring in legislation, to bring in changes to systems where people are set in the way they work. I thought you brought in a very important point or discussion point uh, in terms of intent, right? Now, it's questionable, and people will question that, okay, Mark Zuckerberg, has he really done something for humanity? He's a entrepreneur, but first and foremost a businessman. The origins of Facebook were for dating or other use cases. So he may not, I mean, with Libra, it may or may not have been an intent to be the real intent to be supportive of use cases, but it could also have been. But the key element there being, I feel, is a point to be brought about remittance and the cost thereof of cross-border transfers globally, right?
Hmm.
Which in some cases I think range between 6 to 10%, right? In a lot of cases, even when you're using selective cross-border credit cards or debit cards, you're paying 3 to 4%, which is quite high as a fee for transfers. And when we look at systems such as Nexus and others, which are looking for the faster payment system, real-time transfers, there the fees are fairly negligible. And we had this whole conversation around fees for UPI, but this could be one of the things that may or may not have been the intention, but would have definitely been a problem or a challenge that Libra could have solved, potentially reducing that cost of transactions and fees for cross-border payments, which tend to be quite high, and in a lot of cases, you can lose quite a bit of your money when you're transferring and you make a small mistake, right? But when you're doing it within to person versus having to have 100 details correct about a bank account, you can't miss a spelling or a road number or a the Swift code. I've had experiences where I'm sending somebody $400-500, and then there's a small error in the Swift code, which is not the right branch, but it is the same bank, and then the money is lost, and you're asking the bank how much it will take, and the bank says, "Oh, we're going to charge you $50 to figure out where the money is." Right? It's like, come on, it's in your systems. You've been working with your other correspondent bank and the counterparty, but it is expensive. And when they reject it, again, you lose another 20, 30, $40, right? Now, if you're dealing in 10, thousands of dollars, if it is a flat fee, negligible. But if you're dealing in hundreds of dollars, this fees can hurt just for the cancellation, etc. But also, as I said, the prima facie, the core fees for remittance, which is standard, is pretty high. And that could have been a solution that we would have seen coming out of Libra potentially. Yeah.
Totally understand. I totally agree with you. I think with Libra, and also with some of the other programs that are intentionally created and we've already seen in the market, the question always is that, first of all, a global standard doesn't exist. Second, there are alternatives. And for example, we have CBDC, we have Swift, which has been an alternative for a very, very long time. And the question has always been that it's not solving for transparency, efficiency, and of course, cost. But the question then becomes that with all the G20 goals as well as an SDG goal associated with reducing this, because the world is now such a connected place and we do need alternatives. I don't know whether Libra would have solved for all the use cases. We also heard, and there's been such a big hype about both blockchain, cryptocurrencies, and then finally DLT backed stablecoins and others, which will be able to solve these use cases. My question really becomes that, are the governments and other players really solving for the end use case, but in a different kind of way, which has originated and therefore led to this development of CBDCs that we are seeing today? Or is it going to be private and public efforts being more parallel to each other and alternatives existing in the long term based on efficiencies that can be taken up by both consumers as well as businesses based on choice? So it's going to be interesting how this all comes together and how this all plays out in my world.
And it's a valid question in terms of, are some of the benefits that are coming out of CBDCs more incidental? Like, so you did it because you wanted to protect your monetary policy, you wanted to protect your money supply and the way you controlled it, and not having one tech company, which is influenced by a very small group of people, influence the life of 2 billion people, right? Another thing that quite often comes up and relevant to CBDCs and running a parallel here is when we have that conversation about decentralized money in terms of Bitcoin or other systems. One of the arguments is there's no control, right? So when you see money lost in the ether, literally, when say I'm sending money but I'm on the wrong chain, it's gone. There's a very high percentage, and I stand to be correct. I think it's around 15% of all Bitcoins that are lost in the ether, non-recoverable because people sent it on the wrong chain without knowing what to do with it. That's one. Second, whenever there's a big crash and people lose money, not just in Bitcoin and most cryptocurrencies, there's nobody to kind of come in and provide a bottom, right? Not saying that is needed. There's capitalism and there is open markets where people figure things out. It happens in stock markets, in commodity markets as well. But currencies are something that people want to find stability in, right? That's why you see in countries with very high inflation, in many parts of the world, where they tend to then hang on to US dollars because the US dollar is not depreciating as quickly and is not depreciating at all, while their currency is constantly depreciating from day to day, right? So coming back, and I just did a little bit of a
Mm.
segue there in the sense of the control that is needed. But if you had a central body controlling Bitcoin, etc., they may have been able to, any of the cryptocurrencies which are decentralized, you may then have some mechanisms to protect the end user who's using it for transactions, not for asset holding. If they're using for asset holding, I think it's a different conversation, but just purely for transaction, you don't want suddenly, you have this currency, you expect a certain value, you don't want it to fall by 50-60% or even 5% for that matter, in a matter of
Yes.
a day or a week, right? So with that coming into being, when you have central banks, you have that security in some senses. If Facebook were to fail, right, there was something else in the stock because they're not having enough users and the company closes down, or there's a tech hitch up because there's no proper audit done on their tech systems from a monetary financial services perspective, they could crash, and there's not much anybody could do about it per se, and there could be billions and hundreds of billions of dollars that could be lost. That's on the risk side of things, and I feel that is one of the drivers of how CBDCs have been looked at by the regulators, and to a certain extent, it's just, in a lot of cases, I feel it is a preparation for the future,
Yes.
meaning you're looking at CBDCs and you're saying, okay, do I need it right now? Is my infrastructure ready? Right? We talk about 3G, 4G, 5G. We talk about internet money. We're still talking about ability to provide offline money transfers, and we're talking about use of feature phones, which a lot of the global South has tens of millions, if not hundreds of millions of people on a feature phone. So without internet in vast cases. So how are you going to run a native internet based product, which typically requires a smartphone? Like typically, it can run off feature phones, but typically requires a smartphone at scale. So you may not be able to necessarily have that implemented in the next 5 years even, because infrastructure that needs to come through from all ends is not ready. But you just want to be prepared so that you don't lose out to an external private monetary system. I mean, that's one of the views I look at it as, for the central banks who've just done POCs and tested out systems or taking part in these POCs to and saying, hey, we've done the research, we've done the studies, not for implementation now, but when we need to, we'll be prepared to do so. Yeah.
See, power resting in the hands of private players and power resting in the hands of those who are not directly under the control of central banks has always been the biggest fear of all central banks around the world. And this has also been the main pushback against crypto. And a lot of the countries banned crypto, and I'm going back a couple of years only, simply because they could not understand and therefore they could not relate to and expose their vast populations and their citizens to the risks associated with an unregulated and therefore something that can be gamed in terms of both volatility as well as the value or price of the currency itself. And this is why most of the coins that were launched at that point completely plummeted. NFT didn't take off after it had created that hype. And there's this whole hype cycle which settled down until we came to now this era where COVID exposed us and therefore triggered the countries into action, because suddenly there was a need to still be a one step away from direct contact with the consumers, still be outside of the bank gambit. Banks can definitely play the role where they can play the intermediaries to approach and therefore be able to reach consumers who need subsidies or any such benefits from the governments. And all across the world during COVID, we saw different ways of being able to handle it. India became famous for being able to handle it through the largest subsidy program in the world, where it handed out subsidies to like 80 million consumers, both in terms of food as well as in terms of basic subsidies to be able to tide over the times. US actually gave out checks. And then there were countries who adopted digital wallets like Indonesia, in which there were private players who were given out the remit to be able to directly transfer monies on the behalf of the government to be able to help subsidize and, of course, help consumers tide over that time. But my question, even at that particular time, the question really was, is this just a phase that central banks would be interested in? Is this something that private players will have certain equity that they can build out and therefore leverage their ability to not just be able to get massive consumer bases, but be of service to the nation, especially the financially excluded? Because let's remember, most parts of Asia, there are still some of the biggest pockets of the largest populations of the financially excluded, which means no access to bank account. And when there is no access to bank account, it also in a way implies that many of these users do not have the means and therefore do not have the money where they are earning a lot of money. So any volatility can impact their ability to even have access to food and basic living. This is where I feel the central government started playing the role, and that is why the CBDC pilots went from a couple, which could be you could count on your hands right now, to about 60 to 70, which have taken over the world. With again China being one of the primary ones leading the race with millions of consumers and of course merchants, and the use of Chinese CBDC being something which has become mainstream also after the Olympics. But Musheer, I'm sure that you've had the chance of using the Chinese CNY, and what has your experience been? Does it
Thanks.
match?
Go on.
I was going to say that does it match the experience of using a digital wallet or a digital currency? And what are some of the pain points, or what do you feel some of the challenges in the current rollout?
So I haven't had the full opportunity to actually use it yet, but I've had the opportunity to set up my e-CNY account. Although, in terms of monetary systems, I am now, I'm in Hong Kong, and Hong Kong has a different monetary system. So they created these wallets that you could now access e-CNY through uh, uh, through essentially getting access to an app as a Hong Kong person, right? And pretty smooth setup, pretty easy to do it. It also enables me, if I wanted to go and I could purchase e-CNY through my app, but I could then go to mainland China whenever I travel and use my e-CNY instead of having to use a local currency wallet, which typically requires, what's the right term for it? It requires you to have a local bank account, right? Like in
Yes.
India, your app, your Paytm, your phone pay, like in other countries, typically your payment wallets are linked to a local bank account or a local KYC. So international users, when they come in, it's not easy to actually use the local currencies digitally, right? So that's why cash tends to be a popular choice for tourists. And just
Yes.
building on your point when it comes to the reasonings, etc., right? One of the questions is, okay, so they actually managed to do all of this without blockchain, right? I'm
Yes. Yes.
right? And they did it without blockchain. So why do we need a blockchain now for CBDCs if it can be achieved? India built the Jandhan account for 500 million people, and now subsidies are getting directly deposited. If they have a feature phone, they can use Bharat Beam, sorry, and UPI Beam, and then they are able to uh, use feature phones to transact. So, do we really need a blockchain based system in such use cases? Aren't something like what India did possibly more feasible for other countries? Like if you look at the Chinese, mainland Chinese use cases, they were more testing out the system in terms of shopping. They gave a bunch of shopping vouchers for major sites. You had third party in e-commerce players like JD Ali accepting the CNY that was given in some cases in lottery by the municipalities of certain provinces, right? And went into a few $100 million of POCs. But essentially, it was test cases of more day-to-day shopping and other elements rather than for subsidies. Also, it's a centralized DLT that is being used and customized one that the PBOC's digital currency team had built out for the e-CNY. So my question comes in as in, do we really need blockchain? Do we really need a CBDC currently, right? Is there an extensive need, or as I was alluding to earlier, is it for more so for the future? In particular, retail CBDC. We haven't touched upon wholesale CBDC yet, but I think in particular retail CBDC, that would be my pushback.
I think there's some learning there. Personally, I feel that we will not know the all the answers to this puzzle. Everybody is still trying to discover, and my learning is coming from the fact that everybody is trying a different way. There are, of course, central agencies such as BIS, which are involved in many of these projects, in fact, most of these projects. But maybe we will know the answer to the best way of being able to implement a CBDC, and whether it's going to be blockchain or a non-blockchain based CBDC, what the use cases are going to be in due course of time. Maybe it's a little bit too early to contemplate what is likely to happen. That's just my thinking at this point, based on what little I know and what is available in the public domain, and of course, hearing from all the experts right now.
Okay. And as I alluded to, we could move. Actually, I've managed to find a video. The beauty of doing this over Zoom versus in person, right? Where we could share the e-CNY wallet onboarding.
Oh, excellent.
Let us optimize the video. I don't want to share sound. Okay, share. And I'm gonna run my media player. So here you can see I downloaded the app. It's the e-CNY app on Apple Store, and then I get this interface when I open it. Then it says open add e-CNY wallet. I get to pick from multiple banks and payment players. I chose BOC just as an option. I don't have a, and the interesting thing is I don't have a Bank of China account. This is essentially setting up a Bank of China account also for me. And then I pick a wallet nickname, and then I set a payment pin. So very much like getting onboarded with a regular payment app, right? So there isn't much more at the back end that you have to look at, and I think that's the beauty of something like this, which is, and that's how things should be, where you can do things without having to what's the right term for it? Without having to complicate things and having to know there's a blockchain behind it or not. It's just another system that comes into play, and it's a wise way that they have run it, right?
Absolutely. It's so brilliant to see this because not only the bank account, but also the ability to choose, which means that most of the payment of the banks, especially the popular ones, would already be in the system. So as far as consumers are concerned, they could basically choose from whatever they want, and therefore seamlessly be able to make their payments without ever having to set up like it's typically required of digital payment systems. So this is very cool. And of course, the merchant footprint, at least in the e-CNY implementation of CBDC, is fairly intensive.
Yeah, I'll share
So
one other file, which this is once you set it up here. You can see my balance is zero, so I didn't top it up yet, but you could transfer or pay, use your QR code. You can also receive money, transfer, scan to pay, right? Which is all very, very normal elements of using a wallet that you can see there. Coming back, and I feel, and I wanted to check with you, you've seen India also come up with the e-rupee pilot, right? We're also seeing conversations around maybe State Bank running much larger scale wallets for the e-CBDC, e-rupee in the coming months for multiple subsidies and other schemes, right? Government grants, etc. to implement it as a state-owned bank. Have you got a chance to interact with the Indian e-rupee yet, or is it been more limited use cases and is going to be built up in the future?
So I feel that the build-up has been fairly strong, and the number of consumers who started using this are mostly bank employees who've been because the canteens, etc. At least that's where I've seen this being used, are being able to accept the e-rupee fairly, and it's a very easy application. All you need to do is basically use a QR code, which according to all of us, and all of us have seen the massive growth of QR as a form factor, has been fairly pervasive in the society. So that's not been a problem. I think the bigger question is because the RBI at least has played a little bit of a risk averse kind of role here, where the rollout has been slow, but it has been consistent and it is making progress little by little. And I'm seeing this across a lot of the pilots that are right now being which are in public launch already, where consumers are not being forced to a particular use case versus others. There is a lot of learning that's coming from this, also because most of these apps are owned by banks. Perhaps the user experience is a bit limited. To make this more mainstream, a lot of the private players are being approached, and there could be an availability and therefore of a particular set of use cases that can be built, which offers options to many of these digital wallet players who are essentially who help with the growth of UPI also in the market. So, Mike, again, I think the way this is all developing as an ecosystem is that it's more of a wait and watch. I feel that somewhere the ropes and therefore the parallel payment systems that we are seeing will converge, because you don't need to have an either or approach. Plus there will be an availability, and there is a lot more um, oversight of the central bank in case of CBDC, which is by nature is has the scrutiny of the central bank. So, for as far as consumers are concerned, there is traceability of every single action of theirs on CBDC, which is also raising privacy and cybersecurity concerns, because many people are outside of the tax gambit in most Asian countries where the tax-paying population is fairly low. There is a need to increase the tax base. So the question will be, how do central banks also manage the fiscal and monetary policies to not be able to affect the stability of the banks, at the same time allaying cybersecurity and privacy concerns that consumers are feeling, and still be able to make CBDCs become more mainstream applications for use for everyday use cases, which are either in parallel or in cohesion, therefore working well in collaboration with private slash other payment systems that are already being used. So that for me is the most interesting part of the next couple of quarters, where we will see a lot of this coming together slowly very slowly, of course, not by push or force. At least that's what I don't see in India right now. And I've not heard of a lot of complaints either.
It's interesting, I agree with privacy concerns when it comes to cybersecurity issues in some senses, but I was smiling when you said, non-tax payment, right? And funny side stories is during COVID in Italy and in some, I think in Greece as well. Governments were tight on money, businesses were destroyed, so your accrual of funds for the country are very low, right? However, what happened was they're trying to find people who are evading tax and figure out how much assets people own. One of the ways was to look at swimming pools, and so they would send across helicopters and to see if somebody had a swimming pool in their yawn. They would send people physically in to walk and see if there are swimming pools, and then that means there's a big means of money and they haven't paid, or it will be validated whether they paid or not. So people started becoming smarter and they started building swimming pools on their terraces, right? Expecting that the government will not check. And that's where drones and helicopters were used by tax authorities to find it. That was a segue because I felt it was an interesting element to showcase that, people try evading tax and think they're smart, but the governments always figure out a way. And with CBDCs, I don't think tax evasion should be something that causes you apprehension with regards to CBDC in terms of what your transactions you're doing? Because frankly speaking, if the Enforcement Directorate, the Income Tax Department of most countries, FIU as it were, if they wanted to freeze your account for suspicion of tax evasion, they have the powers to do so. If they wanted to get your
Yes.
banking transaction details, they have the power to do so, to source it, right? Maybe in the European Union, you may have more stricter laws when it comes to user data, but that's one piece.
Mm.
Yes, knowing day-to-day transactions and everything you're doing versus here's your sum of money that you have are two different things, right? There are a few projects which the BIS Innovation Hub is running. One of them which is focused on looking at how CBDCs privacy can be enhanced for while ensuring you have good governance and are able to run the CBDC system, right? So a brief note on the BIS and the BIS Innovation Hubs. I think for those who aren't aware, this BIS happens to be the Bank of International Settlements. Essentially, it is the central bank of central banks, as it's known. And secondly, when they set up the innovation hubs, starting with back in Basel as well as in Hong Kong and Singapore followed, and now we have a host of hubs, including in London and in Germany, in Mexico, as well as in other parts of North America and the Nordics. You had an opportunity for central bankers to explore and develop POCs and innovative solutions, not just for central banks, but also for financial institutions to explore and build out, right? And the project I was talking about, Project Autumn 2, is looking at how you can improve privacy for retail CBDC, and that could be a way that sets up a pathway for and framework for enabling and ensuring good privacies on CBDCs and allaying the concern you're talking about. On the other hand, and I'm taking a segue slightly away from our consumer conversation, because we've kind of had that conversation on consumer use cases. Subsidies is prime of those. Monetary policy, I think, is going to be the other one where you could control monetary policy, especially for economies that may have different pace of growth, but also different economic conditions like inflation, right? A classic example would be Europe, where you typically tend to have a two-pace economy in terms of the southern part of Europe versus the northern part of Europe, and flip in the sense of higher growth in the northern parts and lower growth in the southern parts, where that's where the pigs were, the PIIGS countries that were based largely. On the other side, you had lower inflation in the northern countries and high inflation in the southern countries. So ECBS as a governing council for the European Economic Zone, it becomes very challenging to have a monetary policy that can balance both sides, right? You increase interest rates, that kills inflation, right? I mean, it's intended to kill inflation, but it also increases cost of borrowing, and it has an impact on economies. So it can have a detrimental impact on certain economies that are not doing well and also have high inflation, right? And this could potentially apply in larger countries such as India, in China, and others who have a significant number of sub-provinces. In India has close to 30, similar with China. And that actually makes a big difference, in my view, is the monetary policy play can be very, very useful for central bankers, and of course, programmable money, right? So you could have cases where you say you increase the interest rate only for select regions, and that currency can only be used in that regions per se. If you're moving to a different region, there will be a different way of doing it. This hasn't been implemented yet, so yet to be seen if that works. On the other side, I think you had a few points and inputs on how this could impact the subsidies and consumption broadly as well. Yeah. Sorry, Michael, I was saying you had a few points regarding the custody, consumer and other use cases for CBDC.
I think absolutely. I think as far as the consumer use cases are concerned, I feel that this will be a parallel rail as compared to any of the which will exist in which will coexist with other channels being available. Um, More than the traceability and the trackability, there are enough consumers who would want to use these use cases simply to be able to make payments easier and faster. Specifically, if it is backed by the central government, then there is trust associated with the system. I personally feel that there will be certain use cases. So my view on this in terms of the future is also that I don't see this as a zero or one of what consumers will continue to use. There will be an availability of cash as well. I totally believe that cash will not go away as it has gone away in most of the European countries. And as far as consumers are concerned, they will choose the payment instrument which gives them the most delight. And of course a lot of the popularity of consumer based payment systems has been cashbacks and the ability for them to be able to use it everywhere. Now with QR being the main form factor and a proven ability to be able to change QR in order to adapt to a particular inclusion of a payment system, I think most countries across this part of the world have already shown that it can be done. The question is, what will be that sweet spot which consumers will choose to use and will choose to always leverage, especially when it comes to CBDC payments? Are there specific use cases? Are there only government payouts that consumers also tend to make that will be going to CBDC? Will there be significant cost saving for them? Should they use to store a little bit of money in an instrument which is backed directly by the central bank? I think those are something that will come to fruition as most of these use cases come around. Second piece that we haven't spoken about yet, and it hasn't come up, is travel. Now, many of the corridors within Asia are very heavy traffic corridors as far as outbound travel is concerned. As more and more tourists and upward mobility keeps happening, with aspirational travelers going abroad, there is a need for cross-border payments to happen, specifically when you land in a particular country, and for you to be able to use the payment system right away instead of using cash, or instead having to set up a particular system or get a card, get yourself KYC, etc., etc. So the question of seamlessness, and specifically when across borders, most of the countries are now trying to figure out ways of being able to tap into these particular use cases. I think it will be very interesting as to how CBDCs versus fast payment rails versus existing fintechs which already do the job, and of course traditional players who we haven't spoken about, who already offer very effective and very trustworthy solutions that always seem to work, like prepaid card instruments, etc. How will this all work out, and which strata of consumers are these going to be targeted at? That is going to help us determine how fast these instruments are going to grow, and therefore the growth trajectory in most of these countries. I'm also equally excited by what's happening with Mbridge and the ability to go beyond Asia and again be able to explore corridors that are so far very high in terms of traffic, and also not just in terms of consumer and therefore the retail use cases, but also wholesale. Now, what are governments going to do as far as wholesale CBDCs are concerned? And we haven't spoken a lot. In fact, it can be a whole new topic for another discussion in terms of wholesale, and what is that likely to and how is that likely to impact some global players, as well as, of course, central banks, which currently have huge operations and manage this on an everyday basis, as far as government to government transfers are concerned. And the second and the third for me, which is consumer slash smaller merchants, is the ability to do cross border, but for business purposes. And how will that get impacted by the CBDC rollouts in many of these countries?
It's interesting. I think it's almost driving through use cases when we consider all of this, right? In one sense, it's as you said. I mean, I'm thinking when you were talking through, like, I have my cards, I have my physical cards, but I very rarely carry my wallet. And this is in Hong Kong, which used to be very cash dependent even 4 5 years ago, right? I forget my wallet at times and I'm just using my phone, tap and go. I have my cards loaded. I have a lot of other cards which are virtual in nature and I don't have a physical uh, hard copy, as it were, right? I don't own it. But so you are seeing that change. So almost a lot of these things will happen, and in some cases you have wallets payment wallets which are multi-currency, right? And so CBDC becomes one more option where you plugging in that
Yes.
multi-currency, and a back end you have to work from a product manager, from a software developer, and the startup itself, the tech providers, they will need to produce that. But for the end consumer, I'm assuming nothing. But there's a key thing that you brought up, which is intermediaries, right? And one of the things that's not highlighted as often is looking at your economic system, with your lending and borrowing, right? Your basic banking function. Banks do, from a pure bank business model, it is take money from people, store it, and then lend it to somebody else. Give it some interest to the people who have stored the money in your bank, and have a differential margin to when you lend it, and that's your revenue. That was the good old days of the banks, excluding all the other things that have come up in terms of financial products, right? So if you have central banks issuing CBDCs, and if it's not using intermediaries, which is a question that keeps coming up, whether central banks will do it, then who's going to manage these interest rates? Also, at a higher level of monetary policies, central banks do tend to pay or charge interest rate to banks for storing their money, right? That's how they also control the overnight deposit rates, as they're called, and has a big impact on the way things are run. But I'm not sure if central banks want to get into this game with the consumers, right, where they're managing that payment, and they may still use intermediaries. They may issue, and they will use, which is what happened in mainland China, in terms of using not just the large banks, as we saw on the screen that I shared, but you also had a bunch of what's the right term for it? Payment players such as Alipay, and and a few others like WeChat Pay, who could also offer this to their users. So you have those options, and that's probably where we will see intermediaries still having a say. But it will be interesting whether that gets disrupted, right? What would be your business models when you're using a CBDC where the central bank can go direct and offer the currencies to the users and store it, because it no longer needs physical storage, right? So banks were important because you needed a distribution network. And that distribution network was a physical distribution network, and which could not be necessarily be managed by central banks themselves. Hence, you have that disintermediation in some senses, or disintermediation in some senses, and distribution. But now, direct to the phone, central banks can do it. Your phone is your bank, which is true for a lot of us now. I don't know when the last time you went to your bank, or how often you go to your bank physically to do any business, right? For me, it's once in a quarter, maybe, even lesser. That's probably for the ATM. But beyond that, I don't in today's world, right? So that's one piece. I do want to talk about wholesale CBDCs. You brought up mBridge, a bit of history for the audience on mBridge. mBridge started off as from the roots of a cross-border initiative between the Bank of Thailand and the Hong Kong Monetary Authority, Project Lion Rock / Inathon, which was to look at cross-border trade using CBDCs between the two countries. And then it extended once the BIC Innovation Hub was set up. This became one of its first and most important projects, where you then had the PBOC's digital currency team institute joining in on one hand, and then the Central Bank of UAE, which then made it a multi-country bridge, where you would have transactions using multiple CBDCs between these four countries and jurisdictions, rather, where you then enabled traders, so on a wholesale perspective, to be able to do cross-border transactions. And it's moved from POC to MVP earlier this year as well. And so you've seen live transactions, significant size of it, and scale running into millions of dollars. And so I think that is a feasible movement that we will see when it comes to CBDCs, where many of the central bankers are reaching a conclusion that retail CBDC, probably you could test it out, but the use cases maybe are 3 to 5 years in the future. But wholesale CBDCs are probably more likely. In particular, I know you touched upon it as well when it comes to cross-border trade. When you need to be able to do it without necessarily having or holding the currency of your counterparty, right? And this enablement through the likes of MCBDC, Enrich projects could probably be the solution for this.
Absolutely. I think it's going to be really exciting how this all pans out. And as we start seeing results actually being declared, it's going to be even more, I guess it's going to be a learning for all of us in terms of how these multilateral efforts can still be as successful as typically private players in this space.
However, there's that question of if the US does not catch up in terms of both CBDCs and blockchain and other elements, will they be left behind? And this is for us to see whether the world's largest economy, 2 times the size of the nearest one, can continue to function. We've seen, I mean, you have still significant amount of cash and paper-based, if I may use that term, transactions in the US. As you mentioned, checks are still so huge in the US, despite all the development, despite all the availability of internet, mobile technology across, the penetration of digital payments at scale is still small. And we just had the Fed now, in terms of the real-time payment system come up, which is a surprise given the lead and innovation you see in the US. So maybe we'll see it will take a few more years for them to establish it. I don't think it's in a question of ability to develop those systems or having the money. It's all a question of motivation and what would be their key factors when they're implementing use of CBDCs as well as other forms of digital money. So audience, yeah, we've gone through nearly an hour of this conversation on CBDCs. We want to touch upon it because we felt it's a conversation that keeps coming up. There's a lot of focus on this. Over 140 countries have piloted or are in the process of being a POC or a research when it comes to CBDCs globally, right? Some have, like the Sands dollar in the Bahamas is in place. We've talked about the e-CNY, which I showed. We have the Indian rupee as well, which are all live and are being used. But it's all a question of how we see this evolve. As I previously mentioned, I think this is a 5 to 10 year story where there will be the dominance. And for some ecosystems where they're still building out their digital payment systems, there may be a leapfrogging that takes place and says, let's just go with using blockchain and CBDCs rather than having to build a digital payment stack and just leapfrog that because you're eventually going to reach there. Final words, Monica ji?
I believe that I'm going to be one of those people who's going to be watching out for not just CBDCs in the consumer space, but really trying to see how the countries are able to use this type of alternative payment system in order to establish both their own supremacy as well as use these for financial inclusion. I know we've spoken a lot typically about how the excluded typically are not involved with digital payments. And I personally feel that this is not just a responsibility of the government, but also of the private players. It's not CSR, but at the same time, we need to be able to enable them to come within the gambit of digital payments. And CBDC can be a very powerful tool, specifically with programmable currency use cases which are being piloted. I think the offshoot of all of this is going to be how quickly can we get people to not just have trust in the system because it is centrally backed, but also how the private players will use this trust-based system, which already has most consumers vested in it, and be able to use this to build use cases on top of it, which will offer them value and be able to increase their revenues in many of these countries where there is a question mark on the profitability of these digital payment players who have not been able to make a mark, except for, of course, have millions of consumers. So it's a very interesting space to watch out for. And I think we should do another series or another talk just on wholesale and what are some of the most exciting things that are happening in that space.
Agreed. I think we can have a look at this going forward. Other points we didn't touch upon are how we've seen the evolution in digital payments from, I was talking about this as a hardware has changed significantly. We've gone from feature phones to a big prevalence of smartphones. You've seen software change where you can hold and you can do a lot more with your phones. And then you're seeing the airwaves, right? In terms of telco going from 2G, 2.5G to now we're talking about 6G in some countries. So there is that rapid change that's had taken place in the last 15 years. And maybe the next 10 years, we would then have that ability to do a lot more as you have all of these elements coming together, right? The packets of data that can be sent in 5G versus 4G was a very big difference, allowing for streaming and much more higher quality videos like we are doing right now. So yeah, a lot to unpack in the coming months, and keeping an eye on this topic. We will come back to you on this probably early next year. If you have any other topics that you feel you want us to discuss or get to know more about, please do let us know in the comments, or reach out to either of us on LinkedIn or Twitter or any means that you know all, us through. And we would definitely look to touch upon that. And we should hopefully be seeing each other in a couple of weeks from Singapore Fintech Festival, where we will come to you live from there together. But we'll also do a session before that covering another topic in 2 weeks' time. So yeah.
Thank you so much and look forward to the next session. Thank you, Musheer.
Great. And over and out, please follow us. It's Fintech Decoded with Monica and Musheer, and follow our YouTube channel with FinStep Asia, as well as our other channels to keep abreast about fintech and other elements of digital finance. Thank you and have a good day.